Okay. Good afternoon, everybody, depending on which side of the world you are. We are today in a quite different setting compared to last week, where we already did the initial panel in Rotterdam, in the Hilton Hotel, where we basically discussed the same topic about financing ships, but more important, in combination with sustainability edge, what the challenges are, what our experiences are, and how we all see the future of shipping together, especially with this financial edge. And in this regards, we have some people around the table where we're going to have a proactive discussion with. One of them is sitting next to me, which is Edwin Zuyderzee, founder and CEO of Atal Solutions. They will all do their introduction soon themselves. We got Michiel Steeman on the other side of Zuyderzee Capital. Huge experience from the banking industry and way more. And we also have Phrixos on the other side, who is also from the family history, ship owner, but nowadays technical management and more activities. And myself, well, I'm moderating the discussion from the Damen Shipyards Group, where we are majority focused on shipbuilding, ship retrofitting, and obviously all sustainability solutions here and there, with obviously financial solutions incorporated in it. Edwin, sitting next to me, please, short introduction about yourself.
Yeah, so thank you so much, Rutger. Edwin Zuyderzee, I'm founder of Atal. We're basically a turnkey contractor for impact projects we do globally, which are supported by export finance. One of the sectors we're active in is green shipping, either call it green or blue. But this is, I think, for my introduction, maybe over to Michiel.
Thanks, gentlemen. This is Michiel Steeman of Zuyderzee Capital. My personal background, indeed, as Rutger said, is of the banking industry. I started mid-90s at a Dutch shipping bank called Netship Bank, Nederlandse Scheepshypotheekbank, in Rotterdam, which was then taken over by DVB. In total, I spent 23 years with the bank, having worked in the Netherlands, London, and Singapore. In my Singapore years at the bank, I was also not only financing our own clients of the bank, but also working with export credit agencies in Asia, as well as leasing companies from China and Japan. In 2019, I left the bank and joined Zuyderzee here in The Hague in the Netherlands. Zuyderzee is a financial advisory boutique fully focused on shipping. So we are only doing maritime on a global basis, whereby on behalf of clients, we try to obtain the best source of equity and debt or lease funding to lift projects, as well as some M&A advisory as well in the maritime space.
Thank you, Michiel. Phrixos?
Okay. Hi, I'm Phrixos Papachristidis, CEO of the Hellespont Group. We're a company that has a history in ship owning, commercial management, technical management. We operate from Hamburg and from Athens. We also provide manning services out of the Philippines, but we work with several manning agencies outside of the group as well. My personal background, I mean, after a very short stint as a broker at Poten and Partners for about 2 years, I came to the Hellespont Group, and I was part of the, I guess you could say, business development, so involved in buying of ships at the time we were growing. Also the chartering of our ships, either on time charter pool basis, or we had a small outfit doing some spot chartering of chemical tankers. And then through the period, we've grown our business as also a third-party technical manager. Today we have 25 ships in the fleet, with a very strong pipeline, and really looking for ways to not only grow the third-party technical management business, but also to re-enter as ship owners in some form or another. So yeah, that's us.
Thank you, Thank you, Phrixos. And to immediately provide the first question to yourself, as you are already stating yourself, you're not only involved in the technical operations, but you're also focusing on the commercial operations of the ship, which basically means you are continuously trying to find either a balance between fuel consumption and technical viability, or you are fully focused on trying to aim for the highest fuel saving potential in order to get the highest charter rate out there.
Right. So what's the question? How do
you look at it?
Well, I don't think there's one. I don't think there's one answer to that question, right? I mean, I think it's highly ship dependent. It's highly trade dependent. It's highly and the options that are available to ship owners. I mean, there are some proven technologies, and there are some not as well proven technologies, and it's finding the balance or whatever fits your need and the needs and the trades of the ship, the trading patterns of whatever fleet that you're running. So I mean, of course, as technical managers, we've got a very assiduously monitoring speed and consumption of the ships. I should say that the ships, I mean, the average age of our fleet is quite old, so it gets harder as the ships age, but it's again, the options are there. It just depends on the ships. Also, when you look at it on an ROI basis for some of these technologies, typically it's easier to justify some of these technologies on the bigger size ships, or depending on consistency of trades, where you have also weather affecting, weather patterns that could affect the consumption or the speeds of the ships can also be better predicted, as it were. I don't know. I mean, and also, in terms of, sorry.
Understand your point, Phrixos, but nowadays we are entering into a new era of shipping where you see on one edge regulations basically pushing or fining ship owners which are consuming too much, or fining their tax on their CO2 emissions that is one push from the regulatory side.
Yeah.
But on the other side, also what we see, and I will come back to that later, is also that from a commercial side, due to these taxes and higher costs, that the push for green solutions becomes more and more. But do you then think that what holds ship owners back is then the proven or not proven technology, or is it the financial business case?
No, I mean, there's a balance, really. It also somewhat depends on the owner's financing requirements, right? I mean, I think there was a comment in the description of this webinar. Some financiers have requirements, lending requirements, or environmental requirements for lending. But I mean, if you're going to retrofit a ship, or if you're going to spend extra money to for some of these technologies, there has to be the investment case has to be sound, right? I mean, you have to assume that you have to ship owners have to get their money back in some form or another, and we're for some of these schemes that ensure that. But it's longer term, I'm not sure who's gonna, or longer term, I'm not. I see these decisions becoming harder and harder for ship owners, not easier, as it were.
Clear. No, I think it's a nice summary in the end. Maybe it's hard for them. let's see how the other participants are thinking about
Yeah,
it.
we hear it's difficult, Rutger. We speak to shipping companies who are looking into modernizing their fleet, but they say if I invest if I order a ship, I have a 25-year horizon, but I struggle to see that 25-year horizon on a certain fuel decision. So therefore, people tend to postpone or go for some flexibility in the design, but it's a difficult one.
Yeah, and then you have the other wobbler in there of Mr. Trump. Now acronyms seem to be out of vogue. I mean, who knows what he's going to say to the ESG acronym, right? I mean, it's hard to make these kinds of decisions, to invest that much capital into a ship which has a very fuel efficient engine that burns a different type of fuel. If that investment case is not there.
So what we
Michiel,
see,
yeah,
go ahead, Rutger.
Yeah, no, I want to ask you the question. Can you elaborate a little bit more on what you just said? Now you went very into the technical aspect, how you speak towards the customers, but in the end, you tried also to provide a solution with what you offer with Zuyderzee.
Yeah, we are of course trying to assist owners in financing their capex decisions, whether that's a retrofit, whether that's a second-hand purchase, whether that's a new build. And indeed, if owners opt for a decarbonization solution, either retrofitting or a new building order, then there are certainly a number of green financing alternatives available that are otherwise not available, and we are of course exploring that for our clients in such case. But still, the financing element, the fact that you can get financing for a certain choice, is in many cases not enough for ship owners to be comfortable enough in making that long-term decision in view of the long-term uncertainty whether ammonia is still the business case for them or methanol in 15 years from now. So what we see on the new build order side is, of course, that a lot of new build orders are cargo backed, either whether it's a LNG carrier or a container vessel or car carrier, even though car carriers look a bit different since yesterday. That most of the new build orders are actually already backed by long-term cargo demand. It's very difficult to make a case for somebody that doesn't have this long-term cargo backing for a new build, and then second-hand or retrofitting is probably an easier choice.
Yeah, thank you. Yeah. Now then, last question. Yeah, we're still there. Last question to on what Phrixos and Michiel both said. The question to Edwin. Basically, Phrixos already elaborated on the technical part and the potential discussions, struggles, which you have also seen personally. And Michiel elaborated on the fact that he agrees that these struggles and difficulties are there, but that financing provides an opportunity. And 4 years ago, you brought these two elements together with an idea. And maybe it's nice to share this idea and what you do with that.
Yeah, I think the first step is that, there's a good intention of all the parties in the market, whether it's ship owners or suppliers or financiers, to think of solutions to create a more sustainable future when it comes to shipping. Whether it's choosing for alternative fuel, whether it's choosing for alternatives to install sails on vessels, or to use different technologies to reduce the fuel consumption. I think the most difficult part in the whole discussion is sort of the chicken and egg story. Who will take the ultimate risk? Is it the ship owner, that's going to install and invest significantly in order to, create a better future? for humankind, if you is it the government that's forcing someone to do it? Is it the financer that takes up the risk? And that sort of because of that, you can see a strong delay in sort of making changes in shipping, which can already be made. So 4 years ago, we started on a project which is currently being implemented with incredible results, like beyond belief results, where we're taking non-ACOL bulk carriers and we're basically reducing the fuel consumption with more than 40%. Yeah, with the ROI of less than 3 years. But to get it done and to get everyone to agree to do it, yeah, it took us a long time. Yeah, because of all the uncertainties. So what we started to look at is, reality. What is real reality? What are we facing? Yeah. Changing the engines of all the existing vessels above 1,000 ton, that weight, you're talking about more than 100,000 vessels. It's not going to happen. It takes too long. There's no shipyard capability. It's going to take 60, 70 years to do that. So it's not an option. Yeah, the infrastructure for alternative fuels is not sufficient, especially not in the smaller ports. So it's not going to work. So we started to look at alternatives. How can you avoid making critical adjustments to the vessel using technologies that have been developed over the past, let's say, 10 years, which are proven technologies, at least most of them, and how to apply them in a combination where you significantly reduce fuel consumption and output, still save fuel, not making it environmentally sustainable. And together with Rutger, we worked on it for, let's say, 1 or 2 years, to develop the whole project. We initially estimated a fuel savings of, let's say, 18 to maximum 25%. And it seems we will go way above 40%, something we also did not expect. Now, obviously, you still have the discussion, okay, who's going to pay for the investment? But that's a simple one. Yeah, because if you do a time charter, ultimately the charterer will have to decide whether they're going to pay for the fuel saving or not. But you can also do a voyage contract. If you just pay the fuel yourself. But that's sort of more like a technical discussion. But in the end, what you can see is that the technologies that are available in the market, when you combine them in the right way, the engineering may take you 4 months. The implementation period may take you 4 weeks, which also means that the vessel will be off hire for a very short period of time. And the return on investment is there. You can do it. There's no reason not to do it. Yeah? It's not saying to a ship owner, you have to take the burden of creating like a greener world. It's an economical decision. And when it's attractive enough, they will definitely do it. The hard part for a ship owner is that if the vessel is a little bit older, yeah, then obviously the tail of the vessel is shorter, so they may be less inclined to make such an investment. There, we're in discussion with all the big class society to look at how to actually, in a retrofit, make a statement that the vessel has a prolonged life, because that's important for a vessel owner too. Developments which are very recent, in our view, will basically change the way we're going to look at sustainable shipping going forward. And we're now doing four bulk carriers. We already see big charterers and big ship owners that come to us. They say, like, we have 70 vessels. We want to do the same. We have massive fleets, and they all want to do the same because they know if they can save 40% in fuel consumption, then happy days.
I see Phrixos with many questions.
Comments is this.
I mean, no. Look. I mean, shipping as an industry is very reactive, right? Generally, ship owners do what they're told because they're service providers, transportation providers. That's it. And so then in order to make these investments, really the critical question, what is the cost of capital? How much is it going to cost them to buy and service that loan, basically, or service that investment? And I mean, you're right. I mean, there are charterers that are willing to pay or willing to give something in a charter, in charter arrangements, but not all, right? And then there's also the thing that worries me, but this is a bit more longer term, not sort of short or medium term, much longer term, is once all vessels have this technology, are more efficient, then we reach normalcy where it'll be back to the cheapest ship, right? So we've done some work on life prolongation. It is good to see that classification societies are doing this, but I'm worried really that in this day there's in terms of cost of capital and short to immediate term certainty, there's not enough there to really justify. And I think that's the reason why it's taking a long time for everyone to agree, right?
But the prolongation of the life of the vessel is of course a real significant tool to reduce the environmental impact. Because if you can postpone the demolition moment, you can also postpone the new build moment, trade the vessel longer, but retrofit and come up with solutions like just presented.
Michael, can you tell some of your banking friends of that reality?
Yeah.
Because it makes much more sense to retrofit and use what we have rather than go out and order expensive.
Mario, let me indeed comment on that because it's a very, very valid point. If you are relying on bank finance for your fleet, there will be an age somewhere between the age of 16, 17 and 20 that a lot of banks are no longer there. We know. Fortunately, we also see various lenders actually able and willing to lend beyond 20, even start a loan or financing from the age of 20 for the right project. Of course, you have to believe in the total project.
Is this a traditional bank? Or?
There are some mortgage banks, yes, and some leasing solutions as well. But you see, typically in finance, you see that the suppliers of funding, they change as the vessels get older. They also change as the counterparty gets larger or weaker. But there are fortunately still people out there that are able to finance beyond 20. But of course, you lose many finance participants. I know, but there are some. But hopefully, ship owners are from that ship age onwards, not really all relying on finance anymore. And we see, of course, people able to equity fund from the age of 20 as well. So it's not like all ships are relying on leverage from that age.
That is correct.
And it's also what we've seen in the discussions with the charterers. It's not only when you're talking about lifetime or lifespan, it's also the safety. It's not necessarily that the ship cannot sail anymore, but it's also the safety aspect that the customers of the charterers do demand in order to keep the ship sailing at a certain rate. So therefore, the statement of class and the statement of the established parties to approve this is very, very important. So we are also involving them in this process.
It's even, in this process, I am always involved to see how they can actually change their policies. Ultimately, I agree with Phrixos. If the whole market follows what we're doing here, it's still going to take 15 years. If everyone does it, 15 years before before you get a status quo where sort of all the vessels have similar technology. Then you go to a scenario, which a ship owner has the cheapest vessel to charter. Fair point. At the same time, it's all about saving costs for the charterer. If the charterer ultimately has less fuel cost, they're going to go for that that brings the cargo, has the least amount of fuel cost, and is efficient. Yeah, really efficient. What we can see with the retrofits we did is also that the vessels became faster. It's not just that they became cheaper in terms of fuel consumption; they became faster, and not a little bit. Ultimately, the biggest issue is that everyone in the market is looking at each other, without really taking the first step, significant step. When we're talking about a fuel saving of 10% or around 10%, maybe 15%, that's not going to make the difference. The whole market really needs to make an effort. And
sorry to interrupt that. And we're talking about that effort. We have one question from the public from Mr. Bloemsma, who is asking, basically, when you use an RRI, does that mean that charterers will pay the fuel cost in charter parties as if there were no fuel savings, or how do you allocate those benefits when those parties are involved? Hey, you're talking about fuel. Maybe good to elaborate.
The charter that takes the charter rate plus their savings on fuel. That makes it attractive for a ship owner to make the investment. Otherwise, why would a ship owner make the investment? If a charterer is not willing to pay, then you go into a voyage contract. Basically, then you take over the fuel cost. So in the end, it's not that it's not possible. It's just being creative to make it possible.
And Michiel, becoming or making a project more creative, like making it maybe also a little bit more complex in a way that you are doing these fuel contracts yourself and the risk of the fluctuation of these fuel costs. Do you see that as a challenge, or do you think that is necessary to make these kind of investments happen or more attractive?
No, I think it's from a financier's point of view, that's an attractive element, but it's maybe not the part where they would grant their financing to. Financiers are in that sense a bit conservative. So
I guess maybe to rephrase my question, Michiel, because usually when you finance, you have a back-to-back contract with the charterer, which is saying, let's say, for 15,000 euros a day, the ship will be sailing, means return of investment of 5 years. But if you take out of this fuel consumption, which is included in this rate, yes, it might be potentially more, but the risk, if it goes down, is also then towards the ship owner, depending how it's structured.
I follow your question, and the contract may in that sense not be as watertight as one would anticipate. At least there's downside risk on the contract cash flow. That's what you mean. Again, financiers are essentially conservative people because financiers have the downside and not the upside. All financiers want is their money and a little bit of return. So people will make conservative assumptions there, but they'll still, I think, on the other end, financiers are also aware that you need to follow the transitional curve that the industry is going through. And certainly a number of the European banks, they don't only have ESG-related clauses in their loan agreements, but also a real ESG strategy in their lending targets. So that's certainly attractive again. But at the end of the day, financiers want their money back.
Clear.
And Michiel, that's also what we discussed during the conference last week. I think the biggest challenge, if you will, is that most of the financiers do not have the technical capability in-house to determine whether a retrofit is worth it or not. So they really rely on proven business cases.
Yeah.
What we have seen is, in the project we're doing now, even though we're talking about around 12 plus aged vessels which have been purchased, we got a financing term of over 10 years for that age of vessels. Is based on ECA financing, 85% of the purchase plus 85% of the financing, so limited to 15% equity against very attractive terms. That's because it's ECA financing. What the major financial institutions told us, and here it's actually a US investment fund that made the investment. The major financial institutions, not mentioning all the names, but they're like typical in ship financing. They said to us, like, listen, we want to do the second deal, not the first.
Yeah, we recognize
Why?
that. Yeah, and it's indeed
it's simple.
The first mover risk. The first mover risk is best taken by an ECA or another sovereign-backed solution, a grant, or of course a venture capital type of investor on the equity side. But to ask a senior secured lender who only has downside and no upside to take first mover risk, that's something which they don't want to do, and they shouldn't do in a way either, because they're senior secured and they don't have the upside. But it's good to see that the export credit agencies take that seriously, and especially, as I also said last week at the conference, I think there's a real difference between the European ECAs and the ECAs in Asia, because the European ECAs, there's a lot of innovation in Europe. We should really remember that and also cherish that. There's a lot of innovation in Europe, and it's also driven from the bottom. It's bottom up rather than top down. It's from small, innovative, creative entrepreneurs that start something and they build it out, and then work together with the established yards or the established manufacturers, working with cargo, etc. And there, the ECAs, the European ECAs, play a very constructive role in supporting that until it's proven technology, and then of course it should be commercially financeable. In Asia, we see it still a bit different. The ECAs are they're just sticking with the larger credits, sticking with the larger yards, and are less the driver of the small scale innovation.
Yeah, Michiel, and I like the explanation and the story to summarize what you said. Basically, embracing these technologies, not only by the technology providers themselves, but also by governmental institutions which support these innovations and potential improvements in business cases. In other words, if I understood you correctly, we could also try the approach of proving the business case expectations of its traditional banks wrong by becoming so green that it makes sense to start investment, and that the non-proven cases become proven.
Yeah.
And there's one additional question from the audience here, which adds very nice on that, and he got intrigued by the 40% number, which Edwin has mentioned a little bit earlier. Edwin, could you please elaborate on the fundamental contribute 40% reduction? I think it was maybe Phrixos' question, but he put it
no, it wasn't. But I'd like to hear the answer.
No. So don't shoot me for saying this, but like I really don't believe. Maybe 30 years ago, I'm a little bit older than maybe I look, but like 30 years ago, if you had like the future of shipping fuel, while LNG or biofuel or any other type of fuel, well, that's the opportunity. The go for it. Talking to all the big technical managers, whether it's OSM, V Group managers in the past years, all of them say, we failed. Why did we fail? Because the infrastructure is not there. It's not sufficient. Ship owners have retrofitted their vessels, changed the engine room, changed the engines. They're actually re-retrofitting to fossil fuel. Why? Because their business opportunities are not flexible enough. Because the infrastructure for alternative fuel is not there. So when we started this project, we said, like, it is what it is. We can't change it. We like, you can only do so much. So today's world, where we stand, is that fossil fuel will be there for the foreseeable future. Definitely in shipping. It's going to take a long time to switch to fuel, and it's not a solution for the existing fleet. Because if you want to make the existing fleet sustainable from an environmental point of view, you can't wait 60, 70 years. Because you're looking at the shipyard capability, if you know the time it takes to do the engineering, to change the engine room, to change the engine, change fuel on a vessel, and then go into a yard, and how long it takes in a yard, and also that during that time the ship owner is not earning money on the vessel, that's not the solution. It's not going to happen. So the only real solution is continuing on fossil fuel. What we did is we said, how can we combine technologies are proven mostly in order to reach that fuel saving? And instead of me talking, you can also,
No, sorry, I can add on that. So, and not to make the story too long, and to answer the questions on the fundamentals to contribute to 40% fuel savings. Initially, we expected 20% fuel savings based on a package of fuel saving devices, 15 items. A few items we can briefly mention: special air lubrication system designed for slow sailing ships, special silicon anti-fouling, special fouling onto the propeller, pre-throw, post-throw equipment onto the propellers, which is all, I wouldn't say completely new, but to combine it all at once is. Then on board of the ship, scrubbers, closed loop scrubbers in combination with CO2 capturing systems, special fuel additives. We have shore power connection. The electrical consumption is being adjusted based on frequency drives. And there are some small smart monitoring systems in order to basically start managing the engine on its new baseline. Yeah.
Can I? Sorry, this is all of this stuff on the ship that you're talking about. All of this.
Stuff on 4 ships in the same time. Yeah.
One go.
And what kind of
maybe
ships?
Before
handy size bulk carriers.
Yeah. Maybe one thing we added to the vessel, which actually we never had a real discussion about, is when you have there's waste from the scrubber, as you know, which is real chemical waste. Most of the time when you go into EU port, you dispose of it as chemical waste. But as everyone knows in shipping, most of the ships leave territorial waters, they dump it in the sea. It's a practice created by IMO, which is actually environmentally more destructive than letting everything that's captured in a scrubber go out into the air. So what we said is, instead of we use closed loop scrubbers, So instead of it dumping it or disposing of it as chemical waste, these vessels will be the first in the world that have a pyrolysis system on board of the vessel, processing all the waste from the scrubber, including domestic waste created on board of the vessel, in a very small pyrolysis plant on the vessel, which transforms all the waste into syngas to run the system and oil that goes back into the tank, making the vessel completely neutral, circular from a waste point of view. That's the first ever in the world. It's sort of getting there, yeah. 4 times.
We are a little bit frustrated that you are not aware of this amazing project, since obviously it is announced online. So I suggest everyone who is watching to search for some press releases related to Atal Solutions and Blue Astra Maritime. More about that later, and we can go into detail of this project maybe when more questions come. But John asked a question, and maybe Phrixos, you would like to elaborate on that, or Michiel. Do we think that ports should have or should play a role or to play a new role in being more proactive in a new fuel infrastructure for our ships or the ships to come?
For sure, but
yeah.
But it's a complicated question, and the complicated question also adds on to our conversation, which we have with a variety of ports, among which one of them is the port of Rotterdam, can be one, or the other well-known ports. Everyone is struggling and looking for where to put their investments in, and it's not easy.
True.
Yeah. I mean, it comes back to the question of cost of capital, and yeah, I mean, can the investment be justified?
And John,
of course,
John in his own question.
Yeah, maybe just to add, there is money available that actually would like to invest in the entire solution. Just a simplistic example: if there is a electrification of a ferry service, but just putting money in the ferries, as for example, an infrastructure fund, they may still be a bit wary of floating assets, maritime, etc. But by presenting a business case, an investment case to an infra fund, saying we need an investment for the entire solution, so also the onshore infrastructure to make sure that the ferries can operate, then suddenly there is a different pocket of money available. So I would say it really goes hand in hand. If there is a solution which requires port infrastructure, then try to raise the funding for the totality. And then suddenly there are some pockets of money available.
I mean, I guess more on the shipping side of it. I mean, rightly or wrongly, shipping is a risk-on asset, right? So, there isn't that much money out there that's, for merchant ships, for a handy-sized bulk carrier, oil or for tankers. There aren't that many pockets of capital that will invest in ships for, with a 20-year horizon. I mean, they want their money back in 3 years, plus return, and then they're out. Which, because so ideally you have an infrastructure fund who is more longer term minded, willing to invest also in the ships to service whatever requirement. But that's just a very tall ask. I mean, I sit in front of some of these guys, but I mean, Michael will probably have more experience than me on that. They just don't exist. I mean, there are very few of them. And maybe the only type of shipping that I can think of that is close to infrastructure type shipping is LNG. I mean, because those are just floating pipelines, really, and or maybe maybe somewhat on the container shipping side, but your regular bulker or your regular tanker, no way. And So there's sort of a mismatch in funding expectations and just the financial nature of the asset when it comes to the merchant shipping. Also, something that we're not really. I mean, I was surprised that you said this super ship was a handy-sized bulk carrier. I thought it would have been slightly more specialized, something a bit more niche, because it's a lot of investment going into what is really just it's a tramp ship. I mean, it goes everywhere.
Yeah,
I mean, and it's hard to doing those calculations that come out with your 40%. It depends so much on what trades the ship is doing, which on that sector is very hard. So when you magnify that to the broader bulker or tanker sector, and then you realize that not all, there are very, the charge, it typically tends to be on the oil side, it typically tends to be the independent oil companies that will accommodate some kind of efficiency in charter rates. But we have to remember that the majority of the liquid that moves around the world is not from independent oil companies. So you have to get a lot of other people on board with these kinds of initiatives. So
yeah, but there you can see that all the big, whether it's the technical managers, whether it's the big charterers, they are all implementing their ESG strategies and policies. And when they can charter vessels that actually consume 40% less, for then hiring the same carrier, basically, consuming more, then they know that, from an ESG point of view, they have to go for the most efficient vessel. The retrofit technologies we chose to implement do not really depend on the route you're sailing with. I'm not sure if I'm allowed to say it. One thing I'm less enthusiastic about is carbon capture, simply because the system, from an ROI point of view, I think it needs a lot of development. The market needs to get ready for it. New businesses you have to create to make it work. Also, the offtake of the liquid is not guaranteed in all the ports you go to. It's the same kind of infrastructure issue.
It's an infrastructure problem, that one.
Yeah. And you have different technologies in the market that some of them, when you dispose of the liquid, it's readily available, to be processed by industrial companies. Some of the liquids still need work. But ultimately, from an ROI point of view, it's a tough choice to make, to be very honest.
Except if the market obviously is going to increase the CO2 taxes.
But
increasingly high, that it'd be attractive. But that's something that's betting on.
But that's only Europe. Yeah, at the moment, US is not part of it. And if you're only sailing in Europe, it may make sense. If you go abroad, then all of a sudden the carbon you capture and sort of the savings you make while capturing doesn't make it attractive from an ROI point of view. The fuel saving technologies we've implemented, by definition, is attractive from an ROI point of view. Obviously, provided that the charterer pays for the fuel saving. Yeah, if not, you have to go in a voyage contract. But when fuel consumption, the advantage is also that by reducing the fuel consumption, you're reducing the emissions. And I think, I can say, what do you think we can achieve in terms of savings on emissions based on everything we implement?
Yeah, with regards to fuel savings, the 40%, You're talking about 40% also emission reduction, but on top of that, with the CO2 capturing system, what we know is we are capable of reducing another 60% of the CO2 based out of the new 100% emissions. So the reductions are potentially significant, but then in the end of the case, it's all a nice story, and marketing-wise, it makes sense. But if we cannot get rid of the liquid, or the liquid infrastructure, I wouldn't say is not there, but needs to be understood by the chartering party, by the off-takers, which need to sign new agreements. It's all, in my opinion, it's all depending on if those decisions and added value is coming from the same company underneath the same umbrella. If one company is not involved, an important puzzle piece is missing.
Yeah, and the issue, and that's also what Phrixos was saying earlier, and Michiel, what we're now discussing is too technical for financiers to step in. They probably got lost after the first minute you were talking.
Yeah, well, especially the senior secured lenders that are also not getting the upside of the benefits of a technical feature. I think if you talk to the investor community, equity investors, there are, of course, various pockets that you can go to. But yeah, that's a different kind of investment.
But the easiest, obviously, is when it's proven, when it's a proven business model, it's easier for people to step into it. That we know. That we know.
Phrixos, you want to say something?
No, I was just going to say that I'm always the first to tell financiers that they should go on a ship. They should spend more time on ships, so that they understand what they're actually putting their money into. I mean, even if you're senior secured, I get your point, Michael, but still, if you're putting that much money into something, you should know what you're putting it into.
Yeah, but I used to be.
I think you're down.
No, so because there's also once you see that we're talking about a big industrial workplace essentially that tramps around the world, you understand more that it's not quite, the world is not quite as predictable as we all want it to be. And from a point of risk mitigation as well, going to see what they've put their money into makes a lot of sense.
My experience is that the established ship finance desks of the banks, those long-term lenders to the industry, they have a lot of knowledge in-house. So I don't think that's the issue. It is really the concept of being senior secured, knowing that you are. I think we lost our moderators. The fact that you're senior secured, you don't benefit from the upside. Why should you take innovation risk or too much of innovation risk in your senior debt funding? Yeah. Being conservative as a ship financier, I think, is very sensible. It also means that we will still have ship lenders in 10 years and in 20 years from now, because we need to collectively need to ensure that shipping banks have a decent performance of their shipping portfolios, because otherwise the banks will decide to go into other industries. We've seen that, of course, a bit after the financial crisis. So if there is a certain risk element which is not for senior secured debt, then there are other pockets of money. There's venture capital. There are some other innovation funds. You don't need to fund everything as a ship owner, but the shipping bank will only finance the conservative part of it, and that's okay.
Thank you, Michiel. We have still some questions, so let's go through some questions while we still have some time available. One of the questions is quite a technical one. What is the benchmark to which the 40% Edwin has mentioned is compared to? For our project, it's very simple, that we do two things. Official sea trials, independently verified by Class Society or by any other institution who wants to check the results. These data analysis are also stuck to a standard process. You cannot go outside or around it. So everything is properly monitored. And to back up those data with real-time results, we also have installed a variety of sensors in combination with the real-time monitoring system. So we do that before and after installation of the systems. So that is basically how we compared it, and then we let an independent society also confirm and claim the statements we make. We have one more question, the costs. With regards to the cost, do you want to elaborate a little bit on how much it costs, the project you were talking about?
I think that's not relevant for the moment. Let's say that the ROI is 3 years, less than 3 years. Because the actual cost to be, it also depends on the vessel you're using. For every vessel, not every vessel is the same. So you really need to carefully look at the vessel, which technologies you want to implement. Yeah.
Maybe we can add on then the thought process before investing, instead of mentioning specific numbers, because this is also a little bit confidential information with regards to certain suppliers. But our approach with whole project was, okay, is there proven data? And besides the price which a certain supplier then puts onto their product, we always requested commitment from their side. So if they would say 10% fuel savings and with a cost of, let's say, 1 million euros, okay, that's fine. We pay you if you prove it. Now, these kind of agreements we obviously have made along the process, and certain suppliers you immediately see not an issue. We will prove it to you. If not, we will either remove it or we pay you with an X amount. So those are very, I think, good ways for ship owners in order to try new things and invest. On the contrary, and Phrixos, that's something you touched on briefly. There's also a lot of word out in the market about manufacturers of engines, that they already thought about everything, that there's no improvement possible anymore. We face that ourselves also many times, but still we are proving different. And that is also to answer another question in the chat. What is needed in order to stimulate or to improve or to increase the speed of implementation of technologies? Is sometimes what many people and companies believed in the past doesn't mean that they were always right. So changing the way of thinking or proving that they are wrong also comes at the cost of going outside the box, and that is for sure also something we did in our project.
I think the most complicated part is when you're implementing the number of technologies we implement at the same time. It's very difficult to say which technology added a certain amount of fuel reduction. Because sometimes when you just implement one technology, you can say like, okay, it has 7 or 8% effect or 4% effect. When you start combining all of them, it's very difficult to designate a specific number to a specific technology. What we can say is that we were surprised by the outcome in a positive way. Obviously, before you start a project, together with an experienced engineering company, you do all the assessment to determine which technologies you want to apply. And then, and then you're relatively certain that you're going to hit the number. The outcome we're facing now is something we also did not expect.
There are quite some questions with regards to the cost. We triggered it. Some question triggered it. So what I will do is I will add some press releases of the project in the chat within a few minutes, so then everyone can find it out there, and the majority of information is available online. I have one more question. Okay, this is basically challenging our 40% again, Edwin. In this discussion about 40% fuel reduction, you focus on energy efficiency, which has the potential to lead to reductions in fuel consumption. Research and real cases indicate that these reductions can vary between 3 and 12%. Now, to add on that, yes, it depends which research and which real cases and which products have been used and how it has been tested. We need to have a look at that first before comparing apples to apples. Usually those researches are based on 1 or 2 of these solutions and not on 15 all in the same time. And additionally, the question is about LNG. While still a fossil fuel has been shown to reduce emissions by approximately 25%. That is so true. And currently, many industry stakeholders view LNG as a valuable transitional solution.
From my point of view, from my point of view, it's actually very. I take a very maybe simplistic point of view, and this is what we do in every project we do, every sector we do. You have to face reality, and I think every focus on innovation, on new technology, on improving a better future, like creating a better future, from an environmental point of view, is something that should be supported, and it's something that ultimately will contribute. The technologies we're using that basically were sort of implemented in the past 10 years, they were only developed because of the push towards a greener shipping environment in the past 30, 40 years. So the whole reason that we were able to do the project we're doing today is because of the right initiatives that were taken, let's say 40 years ago. It's not about 10 years ago. It's a long time ago. When you look at LNG in today's market, it may actually be the future, maybe not. But reality is that after 30 years, the infrastructure is not sufficient, is not there. For ship owners to take a decision to move to LNG. That's one. And 2, when you look at the availability of shipyards, it's not sufficient to actually change the existing fleet from fossil fuel to LNG, by definition. And anyone that says it is basically lying to himself. So it's not a solution. That doesn't mean that in the end, LNG may not be a solution. Maybe it is. But maybe there will be alternative fuels, alternative solutions coming up in the meantime. Our focus with this project is how do you solve the existing fleet? Not what you're creating today.
What that matters today. And besides that, it is a sustainability impact in a positive way. Also, it creates a business case, and finding that balance and convincing ship owners and other involved parties like Michiel and Ed yourself is of high importance in order to speed up this process. We are, I would say close to the ending time. Michiel, anything you want to add to the audience, or anything you want to share more?
Yeah. No, I think it's important when it comes to sourcing financing for the capex. Again, whether it's retrofits, secondhand, or new builds, sourcing financing for the transition. Important to realize there is financing available. It just consists of various different pockets, and you have to look at your project. Which pockets would find me attractive, and what's the cost? So I would still encourage the audience to make those steps, knowing that financing can be found, investment partners can be found, but it takes a bit of time to find your way to the right.
Thank you, Michiel. Phrixos, any last words you want to?
No,
to share?
well, firstly, thank you, Rutger. Thank you, gentlemen, for having this discussion. I mean, I guess to be in this industry, you have to be an eternal optimist. So, I said that shipping is very reactive. If there's one thing that shipping companies are very good at, is finding a way. And so, and then it just comes down to things like cost and incentives and, I mean, as Michiel said, finding the right pocket, which is very hard in what is really just a commodity industry and very risk-on commodity industry in the broad perspective of industry. So, but shipping always finds a way. So I'm an optimist. And thank you again.
Thank you. Edwin, one last word.
Yeah, maybe in the current project which we're doing, when we talk about reduction in terms of fuel consumption, but also in terms of emissions, we're measuring everything on a 24/7 basis in Damen Triton, the Damen Triton system, which is a specially developed software system to measure the performance of vessels. Besides having it officially certified by class. Now, like Phrixos, I'm very much an optimist, but I'm pragmatic, and what we look for is pragmatic solutions to real-time today problems, and we're happy to think along with everyone we can help in that sense.
Thank you everyone for the time, and to summarize the webinar or the panel discussion, whatever you want to call it. Although we are very optimistic, I think all of us around the table, I think it's also, we have a reason to be optimistic because we see that the world and also our sector is changing towards a more sustainable future. While still money is being made, which means that the businesses are continuing, and the opportunities keep rising, not only for technology providers but also for the financial institutions and also for the ship owners themselves. I have shared 2 links of press releases in the chat for the people who are curious about the amounts which we have invested in. And for the rest, I want to thank everyone, gentlemen, for the time, the valuable input. It's too short to have a very concrete discussion about what is possible and how we are going to make our next investment, because I hope not too long from now we will all be around discussing to purchase a few ships together, and I think that is very viable and all possible. Thanks for the time, and let me see, in November we will have one more performance of ourselves in Athens, the 26th and the 27th of November. So we will do a similar panel discussion. And gentlemen, if you liked it, obviously we will do this in the same setup. But that is to be confirmed later. Thanks all for now, and have a lovely weekend in advance.
Bye.
Thank you, guys. Thank you, everyone.
Bye.
Thank you. Bye.